Hey traders, Raghi here, and in this video we're going to have this sort of common theme in the discussion of a number of markets that I want to trade with this one idea in mind that I got from Charlie Munger, Warren Buffett's right-hand man, and that is this: don't try to be smart. Don't try to do the clever thing. Just try not to be dumb, all right? In double green markets where the 8 exponential moving average is sitting over the 13, is sitting over the 21, is sitting over the 34, you've got bullish structure. The smart thing would be to get long. But how about we just avoid getting short? Don't do the dumb thing, and then what you're left with is, well, hopefully the smarter thing, the right thing, the best thing. So if you've got direction right, because you've got directional bias, and that should just not be an opinion or a preference, that should be from some sort of process. That's why I have these trade flags on all my charts. So I stick with my process, I stick with the right environment. What I'm able to do is, if a more aggressive opportunity like a value area low and a 21 EMA present themselves, I can get long because I know that's all I want to do. Now, your tolerance for being aggressive is going to be specifically related to really one thing and one thing only, and that's going to be the entry zone to the validity of the trade. So if this here represents too much risk, then it's simply not an actionable level because the risk it presents is too great. A couple things you can do: play with options, play with micros, play with minis, find ways to reduce your exposure at or fewer contracts at those more aggro levels. So moving forward, I'm still open to this area around the value area low down to the 34 EMA. And as long as we stay above around 37.80, I'm pretty content with long positions in crude and additionally long positions in RBOB. But as we go into tomorrow, which is when we get our API data, I would prefer to again, go out to the next front month, right? So for RBOB, our first notice date for the August contract is the end of this month. So we're going to go out to RBU. That'd be September. That's number one. Number two, let's use the timing of either the API tomorrow at 4:30 or Wednesday at 10:30 with the EIA inventory numbers. It'll affect crude. Crude will in turn affect heating oil and unleaded gas, the RB contract. So we have some interesting timing for volatility on this. But again, let's not get short. Let's stick with the long side. That opens up all sorts of possibilities for potential entries because you're not wishy-washy about which way you want to trade. You know you want to be long, and you'll stick with that side of the market. We talked about crude and copper last week, and I'm not going to be ditching those anytime soon. I do want to get long on copper on a pullback. So again, if I know what I want to focus on is the long side, aggressive levels are always going to be valid. The 13 EMA is going to be a little aggressive, as will this point of control. But again, I don't want to get short. As long as I can handle the increased amount of risk from this area, either with a smaller position or with options on copper, those are viable levels. But remember, the validity extends all the way down to basically 2.6900. So that's a pretty sharp drop. So if you can't take the heat, literally unrealized loss down to this area, position size accordingly or pass. But again, stick with the long side. Don't pick tops in a double green market. Let me switch gears here and show you something else we did in the room, which was Microsoft. I like Microsoft because, generally speaking, as far as options pricing go, it's one of the more affordable markets to trade. Microsoft's pretty good. Facebook's pretty good. Even Apple. I like those because you're not spending, $70 or $100 and something on an option like you might in Netflix or Amazon. So they're affordable, and they're affordable in a way that traders could maybe get into 2 contracts, not just maybe 1. And certainly even a vertical spread into the option I like to leg into mine is still a viable alternative. Well, Microsoft is one of our entries from last week. Again, don't do anything dumb. Charlie Munger's advice: play the pullback and then remember the overall flow of the market, which is still very much up. And so this is a terrific move for us in Microsoft today. So you can see a little bit of what I'm talking about applied to another market. Gold is another one, double green. double green market, 8 over 13, 13 over 21, 21 over 34, bullish structure, a pullback to the value area low, a pullback to the 21 EMA is great, but not on the August contract. We're going to move out to the December contract. I know that sounds crazy, but that's where the open interest and volume is migrating out to. That's going to be the new front month. So it's the same idea, double green, pull back buy, but just make sure you're looking at December and those December prices. We'll get into the details and the setups in the premium video of these and a couple more markets, as well as some of the stocks that are related to our indices. I remain very bullish on the S&P and the NASDAQ, and therefore a number of the sectors. We'll review that in the premium video as well. But in the meanwhile, keep in mind those double green. Think about not picking a top, but rather taking advantage of the pullback. I'll see you in the next update.